Good morning and welcome to the Ticker Trader News. Daily Market Briefing for Friday, August 15th, 2025. I'm your host, here to guide you through today's market moves, deeper insights, and under-the-surface developments that can give you the edge. Visit us at tickertradernews.com. It's a day where the market is riding a mix of optimism, caution, and a few curveballs. We'll walk through today's top buys, names to avoid, key headlines, sector spotlights, and macro forces shaping the next few weeks. Top picks of the day, why they matter. Let's start with the top names worth watching right now, and more importantly, why they're on this list. 1. United Health Group. The big news here is Berkshire Hathaway revealing a new position. That's Warren Buffett's stamp of approval, and historically, when Berkshire takes a stake in a company like this, it signals a belief in its long-term pricing power and stability, even in volatile markets. UNH also benefits from demographics, aging populations, and steady insurance demand. 2. Alphabet. Beyond its search dominance, Google's massive $9 billion investment into U.S. cloud and AI infrastructure, including new data centers in Oklahoma, is a sign they're locking in long-term AI market share. That's about building competitive moats for the next decade, not just next quarter. 3. Taiwan Semiconductor. In a sector full of hype and volatility, TSM is playing the long game. While others chase flashy nodes, TSM's strategy of maintaining profitability on older nodes while advancing its cutting-edge lines is exactly what's keeping margins stable. 4. Nucor Steel may not sound exciting, but in an environment where infrastructure and industrial projects are on the rise, cost-efficient steel producers with strong balance sheets tend to outperform. Nucor is a leader in this niche. 5. D.R. Horton. Even with higher mortgage rates, housing demand hasn't cracked. Data shows steady new home sales, and DHI's geographic diversification is helping it weather regional slowdowns. Top sells of the day, risks you can avoid. Here are the stocks where the risk-reward just isn't compelling right now. 1. Applied Materials. They're guiding softer, particularly due to slower orders from China. The stock has had a great run, but with macro headwinds and geopolitical uncertainty, the odds of a pullback are higher. 2. T-Mobile US and Charter Communications. Both face intensifying competition. Price wars in telecoms rarely end quickly, and when they start, margins usually suffer. 3. GameStop. The speculative meme stock era is cooling, and the fundamentals just aren't keeping up with the price. 4. Plug Power. The story here is all about execution. They've got tech potential in hydrogen energy, but timelines keep slipping and cash burn remains a concern. Market headlines and analysis. Dow hits a record high. Optimism over potential rate cuts later this year is still in the air, and United Health's surge on Berkshire's stake gave the healthcare sector extra fuel. But remember, markets are forward-looking, and the Fed has yet to signal a clear-cut timeline. Google's $9 billion U.S. cloud and AI expansion. This is one of the biggest infrastructure plays we've seen from a big tech name in years. Beyond the AI hype cycle, these facilities will generate jobs, secure U.S. data capacity, and put Alphabet in a stronger position against AWS and Microsoft Azure. Semiconductors, a sector in two speeds. TSMC reaffirmed guidance and is focusing on profitable, steady production, which Wall Street likes. Applied Materials, however, is warning of softer demand from Asia, showing just how uneven the semiconductor market has become. Trade and Tariff Watch. The White House extended tariff negotiation timelines with China. This pause could be positive for exporters and retailers, buying them time to adjust supply chains. Sector spotlight. Gold and commodities. Gold prices are holding near $3,340 an ounce. The main driver? A calmer bond market and a U.S. dollar that's taken a breather. For gold miners, this is a sweet spot. Stable prices plus potential upside if inflation flares again. Industrial metals like copper are also worth watching, especially if infrastructure spending accelerates into Q4. Macro view. The road ahead. The market's tone is still bullish, but the path isn't straight up from here. Three forces will dominate the next few weeks. 1. Fed rate messaging, any shift toward earlier rate cuts will ignite risk assets. 2. Earnings season wrap-up, this last batch will tell us if consumer strength is holding. 3. Global trade developments, tariffs, supply chains, and geopolitical tensions remain a wild card. Closing thoughts. Today's lesson. Strong balance sheets and leadership matter more than ever. Whether it's United Health in healthcare or TSMC in chips, the names with operational discipline are the ones investors keep coming back to. That's it for today's extended market briefing for Friday, August 15th, 2025. Don't forget, you can check out our free mortgage and compound interest calculators right on tickertradernews.com, along with today's full watch list. You should conduct your own research and consult a licensed financial advisor before making any investment decisions. TickerTraderNews.com and its contributors are not liable for any losses or damages arising from the use of this information. Hashtag stock market news, hashtag market update, hashtag top stock picks, hashtag investing 2025, hashtag stock market, hashtag financial news, hashtag stock analysis, hashtag trading tips, hashtag AI stocks, hashtag gold miners, hashtag Eli Lilly, hashtag LLY, hashtag GDX, hashtag TSMC, hashtag Alphabet, hashtag Google Cloud, hashtag TD Bank, hashtag semiconductors, hashtag US-China trade, hashtag tariff news, hashtag investing tips, hashtag market forecast, hashtag finance podcast, hashtag daily market update, hashtag investor news.